Everybody, and thank you for joining us this morning. My name is Rose Kervick and I'm a director with Accountant Online, and I'm joined today by Des McCarthy, who's CEO of Microfinance Ireland. So Des has lots of experience in the financial services industry and senior management roles. And Microfinance Ireland provides small loans of up to 25,000 through the government's Micro Enterprise Loan Fund. So they work closely with the local enterprise offices and the Irish Local Development Network and all the major Irish banks to provide viable businesses with the support they need. So we asked Des to join us today because there's lots of business owners in our community who are interested in understanding more about accessing funding for their business. And I'm here to monitor the chat. So Des will give a presentation, but please do put your questions in there in the chat and I'll put them to Des. We're recording this morning's session, so you're going to receive a follow-up email with the slides and the recording. So let us know your questions. That's the advantage of being on the live webinar. So Des, thank you very much for joining us again today. And we look forward to your presentation.
Great stuff. Well, good morning, everybody. And thank you, Rose, for inviting me to present in this webinar. As Rose says, my name is Des McCarthy and I'm the CEO of Microfinance Ireland. And prior to launching into the presentation, I thought it might be useful to set the scene around the funding landscape in Ireland, and more particularly the level of credit demand in the economy. So the Department of Finance do a semi-annual survey of credit demand, which provides an interesting insight into the state of the banking market, and particularly the demand for credit. And the last survey was undertaken for the period March 22 to September 22. And interestingly, that showed that only 17% of SMEs had requested credit in the 6-month period. And that was a similar level to the amount of demand in the previous semi-annual period. And credit demand was strongest among the medium-sized entities, so with 22% of medium-sized businesses requesting credit, but weakest among the micro enterprises. So of micro enterprises that were interviewed or surveyed, only 12% had sought to borrow. And that has been a level that has been fairly consistent for the last 12 to 18 months. There's been a low level of credit demand among micro enterprises. And in fact, this survey has been running for about 10 years. And is at historic lows. It's never been lower, which is quite concerning. Well, I suppose there's a number of reasons. I suppose two particularly. One, that there's still a reluctance to borrow among Irish people and among Irish businesses. And I think that's a hangover from the financial crisis. And also we're seeing quite a build-up, and have seen quite a build-up of deposits. So businesses are quite liquid. A lot of businesses would have got loans during COVID as a safety blanket, as security. And they may not have needed them because their costs were down. The businesses were closed, but their costs were down as well. And they've been able to sort away some deposits. So that is possibly one of the reasons. I suppose of those who were looking, so of the 17% who were looking for credit, 90% were approved for the full amount or received a partial approval, which is a good thing to know. So when they went to the bank, 90% of businesses did receive approval. Again, however, the approval rate was highest among medium-sized businesses at 97% and lowest among micros at 82%. So only 12% of the micro enterprises sought credit, and of those, 18% were declined. And that's important because micro enterprises comprise 90% of all businesses, or over 95% in fact of all businesses in Ireland. So it is important that we focus on this sector. So, and again, I mean, the reason the businesses weren't borrowing is 70% said that they had enough internal resources, and 11% said they preferred not to borrow. And looking forward, asked whether they were expecting to seek bank finance in the next 6 months. Only 11% of micro enterprises said they were expecting to seek finance, which is higher than the previous quarter, which was only 7%. But again, it's at 10-year lows. And I suppose, why is that important? Well, it's important because in order for business to grow, they need to invest. And if they can't get the internal funds, or they need the funds, they need to be looking at borrowing, and they need to be confident that they're going to be able to not only borrow, but they're going to be able to easily get the approvals. So key takeaways really is that credit demand is generally low. And that's for the reasons that I outlined: a reluctance to borrow, build up in deposits. And in terms of the deposits, for the Irish economy in the private enterprise sector, deposits grew by 6.5 billion in 2022, which is a substantial amount, as you'd imagine. So there is still quite a build-up of deposits. However, our view is that as the cost of living crisis has begun to bite, people have been drawing down on those deposits because costs have been increasing, and there will be a need for more finance.
Many have chosen not to attend the live one, so it certainly shows a strong interest in business loans. Des, so we'll be interested to hear how businesses can access those loans.
Yeah. So maybe moving on, then maybe I suppose on the supply side of finance, which is important for businesses to know. Central Bank do a survey regularly to find out what's happening in the bank market, and what they have found in the last 2 quarters is that credit standards among the commercial banks are beginning to tighten, and are expected to tighten further in 2023. And this means it's going to be harder for businesses to obtain the finance that they want. And I suppose in this context, our product in Microfinance Ireland is probably more relevant than ever. So today I'd just like to give a high-level introduction to Microfinance Ireland and explain our purpose and mandate, quickly run through our product offering, our eligibility criteria, because we don't fund all businesses, and finally give some insights into our application and approval processes. So who are Microfinance Ireland? So MFI is a government-supported lender to businesses that cannot access funding from the traditional banking sector. And we were established as part of the Action Plan for Jobs in 2012. So we're 10 years in existence. And we're supported by grants from the Department of Enterprise, Trade and Employment. And we also receive loss guarantees from the European Investment Fund. So this enables us to do what we do. So, we're able to take risks that the banks shouldn't be taking, because the government supports us through grants and Europe supports us through loss guarantees. Clearly we do have residual loss, but the European Investment Funds provide a significant partial loss guarantee for us, which helps us do what we do. Essentially, we're an enterprise support and job creation mechanism, and we're part of this government business support ecosystem, which I suppose starts and includes Enterprise Ireland, who provide equity, debt and grants to larger export area oriented and manufacturing businesses. The local enterprise offices that provide grants and training to businesses at their local level. And then there's us, who work very closely with the local enterprise offices who provide loans to small businesses. So what do? We provide loans of up to 25k to viable small businesses. So we must believe that the businesses are viable, and that those businesses cannot access funding from the banks. and the inability to access finance can come from any number of reasons. Normally due to the fact that the business is in startup business, the lack of experience maybe of the business owner, or issues such as impaired credit history from the past. And I suppose in terms of viability, that's a subjective thing for us. We need to go through our evaluation and believe that at the risk level that we're prepared to take, do we believe that there's a certain probability that this business will survive? And then in terms of the unbankability, or the inability to get money from the traditional banks, we need to do our own assessment on that as well. We don't look for a bank decline letter. We employ a large team of ex-bankers who do evaluations for us, and they will make that evaluation to say yes in their view, or no, yes or no, in terms of whether the bank would get finance from the business would get finance from the banks. So to qualify for an MFI loan, the business must be located in the Republic of Ireland, create at least one job here, and cannot have any more than 9 employees, and must have a turnover of less than 2 million at the time of application. So these are very important eligibility criteria, pass-fail criteria, effectively, because the 9 employees and the 2 million is essentially the definition of a micro-enterprise throughout Europe, and we can't fund anything other than micro-enterprises. And because we have a European guarantee, and because of Brexit, the loans now have to be only in the Republic of Ireland. Previously, you could have been in the island of Ireland. So those are the reasons for that, and these are sort of non-negotiable criteria. And as for the reasons said there. So as I said, we work very closely with the local enterprise offices. The LEOs are an important source of business referrals for us. Our experience is applications submitted through the local enterprise network are much more likely to be approved first time, as the LEOs have business advisors who assist in putting the applications together, and they know and have a good understanding what is required for a successful application.
So that's good to know. That's a good tip then, to go through the local enterprise office in the first instance.
Absolutely. I suppose, we accept applications directly or through the local enterprise office. My view is that the local enterprise offices are that hidden gem in small business in Ireland, that they provide so much free advice and grants, and you almost should, as part of your business startup checklist, you should say, the Visit My Leo office should be on that, because they will always be able to help you. And it's good to have that relationship from the beginning.
Just to let participants know, we have a webinar with Local Enterprise Office, Dublin City Local Enterprise Office, on the 19th of April. So that will be a good complement to this webinar. And Des, we have a question from Sarah. She asks, can the one employee needed to be eligible be the owner of the business? Yes. Okay.
Yeah, that's fine. And I suppose, just to be clear, the 9 employee limit is 9 full-time equivalents. So if you have 5 4 full-time people and 5 half-time people, that's whatever, 7 people in terms of FTE. So it's an FTE number.
Thank you.
So in terms of just the final piece around the LEO is that, because the LEO do work for us in terms of putting the application together, we recognize that by giving LEO submissions a 1% discount on the interest rate charge. So it's worth people's while to look through the LEO and to try to get some assistance from them, both in terms of application preparation, but also in terms of interest rate. So, and then I suppose the final thing is that we're not here to compete with the banks. If a business is able to get funding from the banks, then that's great. They don't need government support. So we as I said, we're funded by grants, and clearly that's a very scarce resource. So we need to make sure that we're allocating it to the businesses that need it most. So that's a key piece for us. So just moving on then, I thought it would be useful maybe to outline our points of difference compared to the commercial banks. I suppose this is not trying to, make big us up or to say, aren't we great? To be honest with you, look, we have a very different structure from the banks, and we have a very different mandate and a very specific mandate from the department to do what we do. So we're privileged to be in that position. But just to give people a feeling for what it is that we do. So look, we're here to fill gaps in the funding market where the banks don't want to lend. And this, it tends to include higher risk, smaller businesses, be they startups or existing businesses that are looking to grow. And startups for us are any business that's up to 18 months in existence. So you may be a day one startup or an 18-month startup, and you'd still be considered a startup for us. And I suppose, as I was mentioning to you earlier in the very first slide, the approval rate for medium-sized businesses is 97% for the banks, but only 82% for micro business. So it's clear that smaller businesses are probably not as likely to get a loan from commercial banks and need more financial support. And that's what we're there for. In fairness, I suppose these higher risk businesses are loans that the banks should not be funding, as they're outside of their risk appetite. But I suppose we can take on that higher risk due to the government supports that we receive in the EIF guarantees.
Very good.
And I suppose, that support and our government mandate allows us to charge an interest rate that is not in keeping with the level of risk that we're undertaking. And I suppose for us, the definition of success is for somebody to get a 3 or 5 year loan from us, and then to repay that loan, and then to graduate to a bank loan. That would be brilliant. We're a very transactional business. We're not a relationship business, in that we don't expect our customers to be with us long term, but we do have the ability and the facility to be able to provide follow-on loans to the extent that we believe that the business is still not quite bankable. I suppose for us, a poor credit history is not an automatic decline item. We understand that some people have encountered difficulties in the past, and due to the financial crisis and all the collateral damage there, lots of people in Ireland do have a history of poor credit. What's important to us is how that was dealt with and how people faced up to it, and we will seek to understand that and what happened and how it was dealt with through our evaluation process. So we speak to all of our customers, and we do manual underwriting, so we do not auto-decision our loans. And most banks now auto-decision smaller value loans, and they need to do so due to the volume of loans and the efficiencies they need to get. So that's the right thing for them to do. But auto-decisioning tends to be detrimental to the approval rate for new businesses who don't have a trading history, or anybody with a poor credit history, because it's the algorithm is based on people on certain parameters that say new businesses are high risk, people with poor credit history are high risk. So if as an applicant you don't fit within certain criteria, then the client is more likely for decisions that are automated. We have a team of loan assessors who are located throughout Ireland, and one of our assessors will speak to each borrower to get an understanding of the business, the motivation of the entrepreneur, and so that we can get a good idea as to what the business is about, and also to give people the best chance of getting an approval. We also provide free mentoring, which is one of the things that sets us apart from the commercial banks. And this, I suppose, we acknowledge that not all small business owners have all the skills to make the business the success that they want it to be. And by providing free mentoring, we increase the chance of that business being a success and us getting repaid in full. So it's a win-win for us. And that mentoring is provided through the local enterprise office network. So it's through their network of mentors, and it's local on the ground. And I suppose finally, as a not-for-profit, we're not purely driven by the bottom line, but I mean, our purpose and mandate is to fill funding gaps where they arise, and that's reflected in our loan pricing. So just I suppose looking at our typical customers, so to give people an idea as to who our borrowers are. So, you know, they've often been referred to as Main Street Ireland. You know, we fund the butchers, the bakers, and the candlestick makers, and hairdressers, gyms, nail bars, you know, farmers, coffee shops, like everything. They're all small business, and what binds the customers together tends to be the fact that they provide everyday products and services to their local communities. And you know, they not only provide the products and services, but they create employment, which is absolutely key, and that they add to you know, vibrancy of the local area, which is really important for us in terms of our mandate. And I suppose for many of our borrowers, their motivation is to follow a passion or to transition from unemployment and to achieve financial independence. You know, they're not looking to be the next Google or Meta. They mean that they may have an ambition to have one or two shops or something like that, but you know, they're not looking to change the world.
Okay, and that's quite a difference, isn't it, from even, you know, when we would talk to local enterprise office or Enterprise Ireland about grants available. They're usually not as generous to service businesses as they might be to technology businesses, which have an ambition to export, etc. So this is really supportive of the local Indigenous business person, small business person.
Exactly, that's exactly what we're here to do. You know, our borrowers are small businesses. So, you know, on average, our borrowers employ 2 people. So, you know, that's the nature of the business. You know, it's probably not that unusual in Ireland, but that's where we are. I suppose the other piece around the sort of the localized nation, or the rural piece, is that 80% of the loans are outside of Dublin.
Gosh, that's very high.
For businesses outside of Dublin. And I think there's probably over 75% is outside of like urban areas. So in terms of our disbursements for 2022, 40% of those were provided to startup businesses. So we genuinely do look to fund, and we do fund startup businesses. And over 36% were to businesses we funded businesses founded by female entrepreneurs. So, you know, it's important to us to, I suppose, to ensure that we're getting the gender balance correct, but also not only gender, but overall diversity. So we look to fund female entrepreneurs, migrant entrepreneurs, people with disabilities. And there's a great program run by TU Dublin for entrepreneurs with disabilities, seniors and youth. All of those areas are key areas for us to fund startup businesses, because those are cohorts of people that generally find it harder to get finance, or may not have the confidence that they can get the finance from the banks. Our average loan amount in 2022 was 15,000 euros. We find that we tend to have quite a lot of people who apply for a low amount of money, and then quite a lot of people who apply for 25,000. And in between, it's kind of it's less concentrated. So while the 15,000 is average, it seems to be at the extremes. You know, we deal with most business structures, sole traders, partnerships, limited companies. I suppose what we don't deal with is outside of policy, is companies limited by guarantee. But we I suppose that's something that we may review in the future, but at the moment that's out. It tends to be charities or social enterprises.
Okay, so you don't offer loans to charities or social enterprises?
Companies limited by guarantee, no, we don't.
Okay.
So our approval rate is about 50% of the application received, and I suppose you need to look at that in the context of our mandate. So we're funding businesses that cannot get access from finance elsewhere. So 50% is a reasonable approval rate in this context. And I suppose the other piece that we need to remember is we are a lender. So we must believe that our borrowers have the capacity to make the loan repayments and that we're not over indebting anybody. So that goes into our evaluation process as well. So in terms of the meat of it, so our loan terms and conditions, we have a very simple product, really. We provide unsecured term loans up to a maximum of 25,000, minimum of 2,000, but maximum 25,000 at fixed rates of 5.5% or 4.5% if the application is submitted through the local enterprise office, and repayable over a 3 to 5 year period, depending on the purpose of the loan and the cash flow projections. As a not-for-profit, we don't charge any upfront or early repayment fees or charges, so you effectively only pay the interest charge. We can provide a short interest-only period for startup businesses. And I suppose one of the other pieces that is not well known is that we can co-fund with the banks if your bank is not prepared to fund the full amount needed to undertake your project. So if an applicant is looking for 100,000 and the bank is only prepared to pay to fund 75,000, then that applicant could apply to MFI for the remaining 25,000. And I suppose it's just something that not a lot of people know. And when we do raise it with advisors or with other people, they say, "Oh wow, that's good to know." It doesn't come up that often, but it is useful, I think, for people to know. So what we don't provide is any form of revolving credit facility like an overdraft. We don't provide hire purchase, and we don't provide bank accounts. We're simply one of those non-bank type of lenders that provides a very straight, pretty much vanilla type of product. And like there's plenty of providers out there who will provide these types of products, so we don't need to. Yeah, it's simple, and that's our mandate.
Yeah.
I suppose we're also restricted in our ability to refinance debt from other institutions. So that is something that we're not covered for under our guarantee.
Okay.
There's only a very small amount of refinancing as part of a larger refinancing can be considered, but it's just something that we generally can't do.
Okay.
So turning to the application process then. So first of all, I'd apologize for our application process. I was just talking to Rose earlier on that it's very manual and paper-based at this particular point in time. We're in a process at the moment and quite advanced in trying to automate that and to improve the customer journey and the end-to-end process generally. But that's probably going to be at the start of 2024 rather than a 2023 start, I'd say. So as to start the application journey with us, you'll need to register your interest on our website, after which you'll receive an application pack by email, or alternatively, you can go through the local enterprise office. So the application process itself is similar to one you would see and you would follow if you were a new to bank customer for a bank loan. So if you hadn't got any relationship with your bank, and you were going to a new bank, well then this is the type of information that would be required. So we need the application form, obviously, so that'll give us all the static data around your loan, your name, address, and all of that sort of stuff. We need your business plan, cash flows, which are key, bank statements, and your credit history report from the Central Credit Register. I suppose the one that people most bulk at often can be the cash flow, because it has this mystique around it, but actually it's only, what money is coming in and what money is going out and what's the timing of those flows. There's any number of templates around, and there's lots of people who can help you with them. But it is a key piece, and it's probably one that, together with the actual business plan, okay, what are you going to do, and who are your customers going to be, and that sort of stuff. It's worth spending some time on and trying to get it right and to think carefully about it. So once we receive all of this information, we pass the case to one of our external loan assessors, and we have about 30 or so loan assessors, and these are external to our organization but are expert in what they do, and they work for us in evaluating our applications. And most of them would be well experienced in the banking world and in other parts of the business, are well experienced in seeking bank loans for their customers. So they have also all sides of the equation covered. And the assessor will make contact with the applicant. So we always speak to the applicant, and that's a really, really important part of our evaluation process. So look, we try to understand the business and give the applicant an opportunity to sell the business idea to us, and to fill in the blanks where there's either an interpretation issue, or try to get more information on certain things. And our goal is to have a decision within 10 business days of receipt of a completed application form. So once we get all of the information, 10 business days should be enough. In terms then of the drawdown process, if a loan has been approved, there's a loan offer letter will be sent out to you as soon as your loan is approved. You'll have a certain number of days to sign that and to accept that loan offer letter. I think it's about 21 days or so, and then the loans can be drawn down pretty quickly because they're unsecured loans. There's no security for us to put in place. It's relatively straightforward process once we have the signed offer letter and the other documents that are required at that stage. So, for instance, what other documents could be required? We may need some anti-money laundering documents. So they could be your passport and your utility bill, that sort of stuff. If the loan was for a fit out of a premises or buying certain equipment, we may look to see the invoices to just make sure that the amounts that you say you're going to use for that are the amounts that the provider are charging you, etc. Generally, though, the other than the offer letter, which isn't complex in any way, the document provision is not overly onerous.
Okay, so really, I suppose in any case, anytime you'd get a loan, you'd need a lot of this information. So the business plan with cash flow projections, a business owner would have that anyway, I would assume, or should have at least know, that shows how we can pay it back, which is what you want to know. Des, we've got some questions in here I put to you on this because this is an interesting summary of the process and the response times. So Amin has asked, what happens if we can't pay back after 3 years? What happens? How is this different to a bank if we're not able to pay back?
Well, look, I suppose first thing, I suppose, the first sign of trouble normally is that a direct debit is missed. So as part of the loan advancing process, what we would do is we would get you to set up a direct debit. And if that direct debit comes back to us unpaid after a period of time, well, then I suppose we would go into an arrears process with you and try to understand why that is. Is it because you were expecting a payment and it didn't come in? is that payment going to come in the future? We would look to see whether there's options around restructuring the loans, so pushing out the repayment profile, lowering the lowering the repayment amounts by maybe going interest only for a period of time. But ultimately, I suppose we will seek to do our best to recover as much as we can. We have a less onerous and maybe less aggressive approach towards debt recovery, but we will seek to work with you to try to recover as much as we can from you. Mainly the reason for that is that we're using taxpayers' money, and we need to be cognizant of the fact that it's not a grant, it is a loan. But it is unsecured, so it's similar to a credit card debt or a bank overdraft.
Okay.
So the answer is, look, we will try to work with you to find a way to either get you back on your feet, or to find a way to see how we can move forward with that. But we don't have security, so we can't take your assets as such.
Okay, so it's a good comparison then. It's like having credit card debt. Yeah. Okay, and another question then, would it be possible to use this type of a loan to buy the assets from another company or to buy another small business?
Yeah, I don't see why we couldn't,
Yeah, okay, great.
So long as it was arm's length, if you know what I mean.
That it wasn't a relation, or it wasn't connected.
Even if it was a relation, but I mean, it's at a certain market value, or you don't want it needs to be transparent.
Sure. And then Vivian has asked, when is the first payment due once approved?
Normally, well, I suppose it depends. Normally it's on the 15th or the 30th of the following month. But if we were, as part of the evaluation process, we'll go through that with you, and we look at your cash flows to see what you can afford, and when that cash is due in. So we can give interest-only periods for startup loans, so the repayments would be reduced for a number of months, while you build up your cash flow. But it's normally we normally have 15th and 30th of the month are the direct debit repayment dates. Okay.
And then, for example, James asks if how long is the loan approval valid for? So, for example, if we were to apply now for the loan, but we didn't need it for a few months, how long would you be able to keep that approval valid?
Normally it's about, I think it needs to be the offer letter returned in 21 days, and then it's open for 60 days. But we can be accommodating on that to the extent that people have a reason why they can't do that. If you explain to us what your situation is, we can try to work with people on that. I suppose the reason why you put specific dates in accepting an offer letter and then drawing down is that obviously life can change very, very quickly, and businesses can change quickly. So you don't want to have to go through a full evaluation process again. But ultimately, we can be accommodating on that, and we are quite frequently. Our job is to try to support and assist small businesses. Okay. So we don't want to be putting any major barriers in the way to the extent that they're not necessary.
Okay, so 60 days is the normal, but you work with a business owner if they need an extension. Absolutely. And I imagine you need to check in to see if the situation has changed in any way. If that makes sense, great, yep.
And it's not unusual for people to seek extensions.
Yeah, I imagine, yeah, because I think when you want a loan, you usually want it pretty quickly, don't you? So that people who are planning ahead want to have that approval before they, need it urgently. I suppose that might be the reason for that.
Like, for instance, let's say you're buying equipment, and your equipment supplier says, "Oh, I'll have it to you in a month," but actually it takes them 3 months to get it to you.
Okay, yeah.
You need to have that flexibility to say, "Well, actually, that's okay then."
Yeah, very good. And then a good question from Vivian saying, moving from self-employment for 18 months to a limited company, would that be considered a startup or a new business? And could they use the figures for self-employment? Could that be used as proof for viability of the loan?
The first part of it, I can't answer off the top of my head, but I'm not sure it would necessarily impact you, whether you're a startup or an existing business. If you're looking for funding, there's no doubt it's probably beneficial if it's the same business idea or the same business that you're going to be doing, as a limited company. It can only be a good thing because you have a trading history.
Yeah, so it's helpful.
That is beneficial. I'm sorry, I forgot the second piece of the question.
No, that's okay. You've answered it. So, in other words, it could be beneficial in the case where the person has a trading history. Yeah, it's just a different structure. Yeah.
That doesn't bother us. Yeah.
Yeah, very good. And then Mark asks, is the loan paid directly to the nominated business account? So is the loan in the form of cash or is it in the form of covering invoices?
So we would pay it to the nominated business account.
Yeah.
If by that
cash.
you mean,
yeah.
If by that you mean the company business account. So we need to have a company bank account to put it into, and it's in the name of the borrower.
Of course. Yep. Okay. So it's cash. Yep. Great. Okay. All right. So that's lots of questions there. If you'd like to continue, Des, if you want to.
Look, there's not much left to go. Okay. So I'm trying to make it mercifully short. So just the things that we consider when evaluating an application, and I suppose the number one is the promoter and their background and understanding of the business. That's the most important factor. So, the promoter will either make or break the business. So that's where we really, really focus. The experience, the skills, the motivation, they'll all be evaluated by our loan assessor. And I suppose that's why the conversation with the promoter is such a key part of our evaluation process. So the business idea obviously is important, and the business plan, and this gives us an insight into who your customers will be, and what sort of market research you've done, why you believe those customers will buy from you rather than your competitors. Who are your competitors, and why do you believe that you'll prevail over them and can coexist with them? Your costs and your selling prices and all of that. So when if you're a coffee shop and you're expecting to do 10 grand a day, okay, where's your location? How many cups of coffee is that going to be? Will you physically be able to do that? Is that possible? Those sort of things. I suppose, what are you using the loan for? Is it for startup costs, to buy machinery, fit out premises, etc.? We can look at all of those things, and that's important, I suppose, also so that we can determine the length of the loan. So obviously, if you're buying a machine that's going to last 10 years, you're unlikely to be able to pay that off in 18 months. So you may need to have a longer loan and to match that up. But that's all fine, and we'll look at that. And then I suppose once we understand all of the sales and cost drivers and the competitive advantage or competitive situation, we look at the cash flow projections and the assumptions around them. And I suppose the important thing, I'm sure accountants online deal with people all the time around this. So, just remembering that profit is not the same as cash. in the bank. So, if you're buying or selling on credit, you need to factor that into your cash flow figures. And not everybody knows that. Small business owners are people who are starting out on their self-employment journey don't necessarily know that, but it's something that you need to look out for. I suppose we also look at what sort of things could impact on your cash flows, and at what level of sales or whatever do you need in order to achieve your break even. That'll enable us to determine a reasonable repayment capacity for the business. And I suppose that is key to us as a responsible lender, so that we're not over indebting us and indebting the borrower, and ensuring that the borrower has the best chance of making the repayments and making a success of the business. So the repayment capacity and the cash flows and all of that, it's such an important part. So it's worth spending time on ensuring that you're comfortable with them. And we will sensitize and we will look at your cash flows and say, well, what happens if cash flow is 75% or 50% or whatever it is. But I suppose what some people do as well, they know that people like us will sensitize those cash flows, so they increase them by 100% to try to counteract that. And that really doesn't work, because your evaluator will say, well, actually, that's a completely unreasonable cash flow. You're better off putting in what you think is correct, defend it to the loan assessor, and put down your arguments for it, rather than trying to boost it in the expectation that it's going to be reduced in a downside scenario. And you must remember, a downside scenario is only that. It is a downside scenario. So that doesn't mean that the assessor believes that will actually materialize. So moving along here, I suppose this slide is really just saying what we have in the previous slide, but it sort of gives you a little more detail. So I'm not going to dwell on this one. And then my final slide is, I suppose, trying to give the small business funding landscape to you. So I suppose this breaks into 4 quadrants. The whole universe for funding a business, be it credit funding or not. So I suppose you'll see the credit elements of it, or the loan elements, falling into the commercial banks piece, the credit institutions, and the non-bank lenders. And I suppose to some extent the government supports where we are. So you can see, I mean, obviously the credit institutions, they're dwindling with the exit of KBC and Ulster Bank, but there's still very strong players there. And then the non-bank lenders are still very, very active, and there's a lot there, and there may even be more than we have there in that particular slide. But you have lots, or there are lots of options, and some of them are very specific around hire purchase or invoice invoice discounting. But there are lots and lots of options there that you have at your disposal. And I suppose then, outside of credit, I suppose it is for your business, the whole competitions and programs piece is something that you should look at, because you can get free money through competitions and various programs there, like the food programs, or the start your own business competitions and stuff like that. And it's not only the financial impact, it's also the publicity and the awareness that you build for your business through this. And I think, from my experience in working on the evaluation panels for these things, you gain so much more by entering these competitions. Even if you think, oh well, I'll never win that, you'll definitely learn a lot about your business. You'll also meet a lot of like-minded people.
Yes,
entrepreneurs.
Build your network. Yeah,
absolutely. So you should look at that. And then finally, there's the government supports. And this shows the main supports that are available. You know, we've gone through some of the Microfinance Ireland, the local enterprise offices, Enterprise Ireland. SBCI is, I suppose, is a provider of guarantees to the larger banks and to the non-bank lenders rather than a funder in its own right. But look, there's loads of them there. And what I would say is I came from the private sector from a bank, and I was never aware of the supports that are available from the government. And there are lots of them. And it's, you know, it's worth spending a bit of time to try to see what grants are available from the local enterprise office or Enterprise Ireland, etc., or, you know, BIM or Burbia, whatever, because there is lots of support there. And the government, in my view, in my short time here, I'm impressed by their willingness and their desire to promote small enterprise in Ireland.
Sure.
They're very aware of the benefits of that.
Yeah, certainly.
So look, that's all I'm gonna say for the moment. Look, we can be contacted through microfinance.ireland.ie. Our job is to support small businesses and those ones that cannot access funding from elsewhere. And I'm open to any questions.
Thank you very much, Des.